Now we are joined by Mr. Bhavik Mehta, Deputy Head of Research and the Investment Products and Century Financial. Welcome, Mr. Mehta. Happy to
Hello,
have you back.
thank you.
And thank you, as always, for your participation. How do you consider or how do you see the positive oil prices with more than $87 on Brent? And at the same time, what about the demand from China now? Is it able to bring prices up?
If you look at the oil price trajectory, you're talking about WTI and Brent prices. They have bottomed in the zone of 70 to 75. Now, this is basically very bullish for the entire energy space. This is bullish for the entire commodity space. The entire anticipation has been the China reopening thing. So, ever since the last October period, most of the commodities have bottomed out. So, even if you talk about something like an industrial metal like copper, you talk the case of gold, or you talk the case of commodities like Brent and WTI. Rise in euro against dollar has basically kept a big push alive in the commodities, WTI Brent being no exception. But the additional push that the energy sector is going to get is definitely from the China reopening thing. So markets are anticipating a big recovery towards the end of the H1 as far as the China stockpiling is concerned. This is where the entire price narrative is going at this point of time.
Mr. Bhavik, the reopening of China, and now this optimism, but at the same time, don't you think that, for example, coming back, but now with a limited period after years of lockdown, with the results on the longer run, don't you think that this is being over optimistic? Or what about the surprise, for example, from China? Will it be totally open now before the end of the year?
If you look at the actions of the government authorities over the last 2 to 3 months, they have been pretty clear. The cases are still on the rise. There have been subsequent good amount of deaths because of the loosening of restrictions. But then we also saw what is happening with the protests and all. So the government's message is very clear. They are trying to revive the economy on the growth path. Now, what would be really interesting to see is the Chinese infrastructure really going to propel that kind of growth? So before the pre-pandemic era, we've heard the stories of China building ghost towns, China stockpiling a huge amount of crude oil in their offshore tankers when it was near to the zero levels, when it dipped near the negative levels. So what would be really interesting to see is with Brent and WTI at the rate of 75 and 80, would the China demand be actually that much, or will they actually wait for a recession started by US and crept across to the global economy? Will they wait for the further lower prices in the crude oil? That would be an interesting topic to see. So in our mind, that could be one of the biggest surprises that the markets need to actually watch out for.
What about what Christine Lagarde said today about, for example, reopening China is good for the global economy, but at the same time, this will add inflationary pressures. Do you agree with this idea? Now, for example, with five more dollars on the barrel, will this add more inflationary pressures globally, or she means, for example, that the gradual demand will do so?
If you look at the history of China, it has always tried to bought commodities at a lower price. So pre-pandemic, that is in the years of 2017, 18, 16, when China cut most of started cutting most of its interest rates. What basically happened was China was at one point of time more than 50% of the base industrial metals. Similarly, for crude oil, it accounted roughly, you could say, 10 to 15% of the entire global demand. So what Christine Lagarde basically was trying to say is a look back at the past period before the pre-pandemic. China has always stood and always exported the inflation to the entire global economy. So in that context, it would be really interesting to see if the Chinese authorities are going to impose, are going to give free quotas for these commodity importers, because looking at the overall economic growth, the deficit numbers and all, as well as the recent crackdown on the real estate sector, there's not big enough of optimism among the local commodity traders. So they are really fearful if the government comes out with sudden quota announcement, if they halts their restrictive imports, what could happen with that particular buying. So it could be more of a wait and watch thing as to how China is actually going to give its policy roadmap in the coming 2 to 3 months.
Thank you very much, Mr. Bhavik Mehta,
Thank you.
Deputy Head of Research and Investment Products at Century Financial. Thank you, and until next time.